Let's take a look at some information and charts on Solana for Brave New Coin. Solana is a proof of stake network, fairly new to the scene, has lots of VC backing, FTX, Solana, or Alameda, SAM, CMS, 3AC. The usual suspects are involved here. So we'll take a look at the staking rewards, validators, all the good stuff. I don't think I have transaction information per day. It's not on Coinmetrics. It's not on Solana Beach. If you are aware of that information, I'd like to know. They do have DeFi, they do have NFTs. We'll take a look at some of that as well. But the whole idea here is that any proof of stake network at this point in time is cheaper, better, faster, stronger than ETH. How this differs from something like Solana or EOS, I couldn't really tell you. I couldn't really map it all out. I can give pros and cons as far as why something newer might be better. They didn't raise a $4 billion ICO, certainly. But functionally, I think all the proof of stake networks on paper are virtually identical. Circulating supply, 306 million. Active stake is actually larger than the circulating supply, which is always interesting to see that. And they haven't really had any issues recently, besides the downtime that they had the other day. I think it was 2 months ago now, when the network just flat out stopped working for 17 hours. And it's obviously not great to see that. The market isn't always connected with those events, which is also silly, but it just goes to show you what actually matters for price is most of the time completely unrelated to fundamentals of what's going on. But if we look at validators and nodes, they're spread out geographically somewhat. Ideally, this is even more decentralized. But what I don't know is how big are the node requirements, and are any of the validators running full nodes? That's always a question that I ask for all the proof of stake stuff, and I just don't have answers that are readily available. Here's the breakdown according to stakingrewards.com for the adjusted reward after inflation for proof of stake is less than 1%, which certainly doesn't beat most interest you get on stablecoins through DeFi. So unless you're bullish on Sol, it doesn't really make sense to stake this over staking USDC, basically. Obviously, if you're in it for the long term and you want to grow your stack of Solana or any proof of stake coin, and you don't really care, you think Solana is going to $1,000 one day, right? Anything now is kind of irrelevant price-wise, as long as you're just getting more Solana. And that's one of the benefits of proof of stake. You can add to your stack passively. You are getting diluted somewhat over time, and the reward certainly isn't as rosy as it is made out to be, but it's definitely a benefit or a draw for people who believe in the long-term health or growth of a project to just sort of set it and forget it. I mean, it's a great hodler benefit, proof of stake. Now for consensus, I think that's another story, but the way it pans out, it's very beneficial to soak up supply. So it looks like there are around 1,300 validators. Super minority is what they call it, is 19. Don't know if that's good or bad. You'd have to sort of look at that over time, but here's the super minority that can halt the network. And they even tell you to improve decentralization, delegate to the validators below. And we can look at the super minority here. Ideally, these are all known. They are not anonymous in any way. That way you can see, who are these people? Are they all the same people? Are they all exchanges? Are they all VCs? Do they have varied interests? A few VCs here, Kraken. I have some Solana that I currently stake on Kraken. But seeing this list and not knowing who all of these players are is a bit disconcerting. Here's A16Z, another VC. So certainly could be better. And down the list as we go, we don't know who any of these people are. So they all could be the same person. They could be the same two people. They could all be Bithumb. I have no idea, which is good and bad. But for proof of stake networks, I feel like as a user, you have a right to know who these nodes are. Maybe I'm off base with that. We can look at TVL on Solana. TVL in general, not super important. I wish there was some fundamental metric that told me something in DeFi or these other chains, but so far it just doesn't really matter. Yes, Solana has been bullish as TVL has been rising, but TVL is also a measure of the underlying, and if the underlying is Solana, then of course it's going to be rising when Solana is bullish. It's going to be falling when Solana is bearish. It has a one-to-one correlation because it is Solana, essentially. Not all of it, but much of it is Solana. And we can go down this list and see how many cross-chain projects are here, how many DEXs, how many lending and borrowing platforms. Ren smartly is just going through all chains and trying to be a part of something. So not a ton of dApps listed here on DeFi Llama. And you could dig deeper and see, okay, what's the volumes on all of these that are DEXs as far as the lending and borrowing stuff? How does that look? How do the AMM liquidities look relative to ETH? Marinade is must be a newer one. I haven't seen that one. Quarry either. So I don't see a lot about most of these other than Radium and Serum, which I'll look a little deeper at. But this is Radium TVL rising over the past few months, 1.68 billion here. It is a DEX, and you can look into this. Trading volume is another one that's like, unless you look at what the volume is, it's easy to just see this number on anything, including Uniswap, and say, oh, look, there's all this volume, right? But the smaller the fees, the easier it is to manipulate stuff like this. Low fees are good, don't get me wrong, but you have to be careful when you see numbers and you're not looking into those numbers. As far as usability and UI, it's just like ETH, just like anything else. They have NFTs, they have other stuff, staking, pools, farms, the usual stuff that anything on ETH would have. And you can connect a wallet easily enough. I don't think they have limit orders. So that'd be one thing to look for in the future for them. But again, you can look at all the pools, you can look at the fees, you can look at what the APYs are. You can attempt to compare that to Curve and Aave and all these other DeFi platforms to see what's going on here. One thing that you could probably do that's easier to do would be to look at depth of certain pairs that are the same on ETH and Sol. For instance, here's what I assume is like double wrapped ETH, so they can sit on top of Solana. But if there's any like USDC, USDT, or like pairs that you can measure, which it doesn't look like there really is, on ETH versus Sol, that'll give you somewhat of an idea of what's going on here. I would look at incentives as well to see where do incentives lie. Are the incentives better on Radium or are they better on 1inch? Those are other things you have to look at. Serum, another DEX TVL near all-time highs, falling slightly in ETH and Sol. So again, it's hard to measure what's really going on here. What's really important. Is appreciation of the underlying more important, or is just raw USD value more important, or does none of it matter? That's certainly also a possibility. And Serum has like it reminds me of ZRX because it seems like it's used for protocol stuff and not directly anymore. I think it was at one point in time, and you can see where it's used here. So it's a bit wonky as far as what is what. Where do you look at the TVL? Do you look at the TVL on Radium, or do you look at the TVL on Serum? So it's very, very, very early days for Solana. If anything, I want to see Solana go through a bear market. I want to see all the cheerleaders change their tone and realize that if you're truly in it for the long haul, you need significant fundamentals to support that. Not saying it can't happen, but it's very, very early for Solana. Here's the Google trends worldwide past 12 months. Just kind of flat and down slightly from all-time highs. Just, kind of looks like price. It's not a shocking discovery that this stuff is pretty correlated with price most of the time. We had an all-time high September 5th in Google Trends, another high November 7th. My guess is those highs line up probably 1-to-1 with price. Flipping gears to technicals, this is the 12-hour 365 MA multiplier. So it's the half-year MA. In the green here, 5 times that MA in the red. And thus far, since 2019, this thing has been dead on the money, eerily accurate at predicting highs and lows. It's not super robust, doesn't have a ton of data here, but the data we do have fits this thing pretty well. So bottom would be 120, top would be 600 based on this read. It's currently in kind of this no man's land, below the midline, above the buy zone. It's kind of this weird area. Something else to sort of mention is I've noticed if this can hold above the midline or be held below the midline, that will certainly influence where trend will go. For instance, again, this isn't an N of like 2, right? But if it can hold above the midline, it typically cruises to that multiplier. And if it gets held below the midline, it typically doesn't easily get to that multiplier. Just something that's sort of more anecdotal, but to watch for. And obviously the highs here have been plucked out almost to the dollar each time. So this isn't really helpful in the moment to give you tradable signals. It just shows you sort of where things are overbought, where things are oversold, and sort of what to expect price-wise down the line. Flipping gears to 5,200, EMAs VPV or volume RSI. We're still above the 200-day moving average at 133. And remember that 183 MA is at 120. So anything below 133, even in a bear market, is probably decently okay. You know, I don't know how deep most of this stuff will go, probably to 60 to 90% drawdown. Let's say 2022 is a complete bear market. What I'd be doing is buying anything close to or near 133 or whatever the 200-day moving average is until we get a death cross on those MAs, and then you're just out, because at that point in time, we're no longer expecting bullish continuation, bullish bounces. You can see how that bullish bounce played out previously, and yes, this was a bull market. It's easy to say this worked out, but that isn't to say it's always going to work out like that. This could have easily crossed bearish, and then that was just it, right? That didn't happen, but in a parallel metaverse, I'm sure it did. The measured move for this consolidation is still 280 to 320. It's also possible that Sol's just up too much for the year. You know, it doesn't really have enough left in the tank to close out the year on a stronger note. Charts like Matic, for example, look better than Solana currently. You know, Matic's sort of pushing all-time highs at all-time highs, whereas Solana is back in this range. So that's also something to consider. Not necessarily for your own trading, but just, you know, where's the action? For the longest time, the action was Solana. There was hype. There was all this enthusiasm around buying it and NFTs and whatever. You know, that I don't see that currently. Maybe it's just me, but it looks like that's shifted to sort of Matic and Luna, if anything. So trend is still fine, but definitely needs some continued strength, I think, to bring people back to the table. On the daily, it's sort of inside the cloud. It's murkier. It's less bullish than it was potentially. You know, you want these set and forget it breakouts. So if anything, if you're bullish on Solana towards the end of the year, you want to see this sort of dip into the cloud, get sad for a little while, and then have some vim and vigor as it breaks through the cloud at around 200 at some later date. As long as it can hold this range, it has a shot at this bullish continuation. And you can look at this on lower time frames. This is the 12 hour. 12 hour is a giant mess, mega ranging chop. You know, this is what you want. You want retests of the Kijun over and over and over again. You want bullish continuation, right? This is clean, easy. There's nothing to do here. Here, the signals are all over the place. You're in the cloud, you're below the cloud. The MAs are all over the place. It's not clean whatsoever. And at this point, you just want everything to reset so that it's obvious, like it was in July, August. You know, everything reset, everything was bearish. And then you got your breakout, bullish to get cross, and away it went. That is much cleaner, easier, and just a better signal for everyone involved than what the heck's going on here. You know, just ranging choppy mess. And on the 4 hour, it's even worse. There's no, TA is not going to help you here, right? It's just, you could say maybe there's some pattern, maybe there's something going on. Maybe this is an expanding wedge. I don't know, but it's just all over the place. And when there isn't an obvious bias, it's harder for people to know what to do. So it's much better to assume it's going to be choppy until it's not. You know, this is what you want to see if you're looking at something on the 4 hour. Everything went bearish. It was even choppy. This is July, but it was even choppy leading into that. And then August, it was just super clean, right? Here was your breakout. And this could have easily happened pre-July. It just didn't. But the point is you treat every clean break like this as though it can have this 5x potential. You know, that's the whole point of the cloud. They don't always work out, but when they do, it pays for the ones that don't. And then looking at the BTC pair, this actually looks quite fine. It's still far above the cloud, far above the 200. Trend is intact. If anything, you could argue either a cup and handle here or an inverted head and shoulders here. This looks completely okay for new highs to around 600K sats. I'd even feel comfortable just buying here. You know, you either buy here or you buy the breakout, but it definitely holds a bullish bias. The ETH pair is more choppy. You know, it had this inverted head and shoulders quality to it, and then sort of had this mini breakout, but didn't really go. Now it's back into the cloud, still above the 200. So it's not as obvious. You know, it doesn't have a clean bias like the BTC pair does. So if anything, Sol looks like a winner against BTC, maybe flat or down against ETH. And then against USD, it is sitting currently in mega chop zone. That can change. That can change if this thing pulls up a little bit over the next 3 weeks. You know, into Q1, I expect everything to just sell off. So I think this is a limited time offer going on here for things to move up. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.